Do you like hitting jackpots? Hi everyone, I'm Marc Lichtenfeld, Chief Income Strategist of the Oxford Club. Welcome to State of the Market. You know, when I was a kid, the idea of a casino was magic to me. The glamour, the idea that you could turn some money into more money in an instant, well, that was pretty exciting. So when I was old enough, I'd occasionally go to casinos and play blackjack for $5 a hand, and things went about as well as you'd expect.
Hit me.
Peter, don't.
Hit me.
21.
Hit me.
Peter.
Hit me.
That's 30.
Hit me.
After all, it's not room service fees that pay for those glitzy buildings and A-list entertainment. So it didn't take long for me to stop being so interested in casinos. Now, around the same time, a friend of mine told me about a way to invest very little money and potentially make big money. Now, I was skeptical. He was talking about options. And some people mistakenly characterize the options market as a casino. Heck, some even call the stock market a casino. Now, the stock market goes up an average of 75% of the time. If gamblers in casinos made money 3 out of every 4 years, Vegas wouldn't even last a year. Now, back to options. An option gives you the ability to control stock without actually buying that stock, and you pay much less for it. So here's what I mean. A call option allows you the ability to buy 100 shares of a stock at a certain price by a certain time, no matter where that stock is trading at that time. So for example, Advanced Micro Devices trades for around $76 per share. Now, if you were bullish on AMD and wanted to buy 100 shares of stock, it would cost you about $7,600. That's a lot of money. And instead, you could buy a call option for around $5 per share or $500 per 100 shares that would give you the right, but not the obligation, to buy AMD shares at $80 by April 21st. Now, you don't ever have to buy the stock if you don't want to, but you have the right to do it. Now, the maximum downside occurs if the stock doesn't hit $80 and your option expires worthless and you lose $500. Now, you don't have to necessarily wait until that happens. If the stock goes nowhere or starts to slip, you can sell the option for a loss, maybe sell it for $3 per share or $300 and have only lost $200.
Not bad, not bad.
But the upside is that you are correct and AMD shares move higher. So if it's sitting at $90 on April 21st, your calls are worth $10 per share or $1,000. That's because your option gives you the right to buy 100 shares at 80, but now it's trading at 90, giving you an instant $1,000 profit on the stock. However, if it's before April 21st, your option might be worth even more because there's still time for AMD to move even higher. So depending on how much before April 21st it is, your option could be worth $1,200 or more. So the big gains come when a stock makes a big move. So if AMD really took off and was trading at $110, your option is now worth at least $30 per share or $3,000. When you buy an option, you should only invest as much as you can afford to lose.
Another 100 chips, please.
Changing 100?
But that's the beauty of an option. If it all goes wrong, you'll likely lose less than you would with a stock.
I've lost $300 in 15 minutes?
If you bought 100 shares of AMD and set a 25% trailing stop and that stop was hit, you'd lose $19 per share or $1,900. With the option in the example, you'd lose $500. Even if you set a 10% stop on the stock, you'd lose $760 versus $500 for the call option. And again, remember, there may still be some value left in the option if the stock goes down, so you may not even lose the entire $500. Now, in my portfolio, I hold my long-term investments in stocks. They're less volatile than options, and I know that over the long term, stocks go up. Options are more volatile, which is why they can pay off much more than stocks in the short term. So when I'm bullish on a stock short term, either because of a chart pattern, I expect the company to beat earnings, or any other reason, I usually buy call options so that I have less money at risk. They're a great way to shoot for big gains while managing your risk. Now, when I was younger and played blackjack, I was smart. I only put on the table what I could afford to lose. I do the same with options. But unlike Vegas, the odds aren't rigged against me and the upside is bigger than at the blackjack table. And if I win big, I don't have to deal with this guy. If you want to learn more about how to risk as little as $50 per trade using options, click on the link below. Thanks for watching State of the Market. I'm Marc Lichtenfeld. I'll see you next time.